On 9th November 1992, Harshad Mehta and his brothers were arrested by the CBI for allegedly misappropriating more than 2.8 million shares with a total value of 250 crore rupees, which is equivalent to 1900 crore rupees in 2023. The impact of the scam had many consequences, which included the losses incurred by lakhs of families and the immediate crash of the stock market. The index, BSE Sensex, fell from 4,500 to 2,500, representing a loss of 100,000 crore rupees in market capitalization. The scam was the biggest money market scam ever committed in India, amounting to approximately 5,000 crore rupees, which is equivalent to 40,000 crore rupees in 2024. This is just one of many scams related to the stock market. There are many financial scams around the globe that are directly or indirectly related to the stock market. But how did the stock market as a concept begin? Today, the Indian stock market is huge with a total valuation of 402 trillion rupees. This naturally makes one curious about how it all started. So, in this video, let's explore the history to uncover the roots of this intriguing subject. For starters, the stock market is like a marketplace where people buy and sell pieces of companies called stocks or shares. Companies sell stocks to raise money for building new factories, hiring more employees, developing new products, etc. When you buy a stock, you are essentially buying a small part of that company, making you a partial owner. If the company does well and its value increases, the price of its stocks may go up. When you sell your stocks at a higher price, you make a profit. However, if the company doesn't do well, the value of its stocks may go down and you could lose money when selling them. Now that you understand what a stock market is, let's see how it all started. Stock markets have been around for much longer than you might think. The earliest forms of stock trading can be traced back to ancient civilizations. Yes, you heard it right, ancient civilizations. In ancient civilizations such as the Roman Republic and the Dutch Republic in 17th century, merchants and traders would gather in designated areas to buy and sell shares in joint stock companies, government bonds, and other financial instruments. These financial gatherings laid the groundwork for the development of formal stock exchanges. In 1602, the Dutch East India Company established the Amsterdam Stock Exchange, which is widely considered to be the world's first formal stock exchange. Following the establishment of the Amsterdam Stock Exchange, other European cities such as London and Paris soon opened their own stock exchanges. Later, during the period of Industrial Revolution, stock exchanges expanded across Europe and North America, with cities like New York, Paris, and Berlin establishing their own exchanges. Coming to the Indian stock market, the roots of the Indian stock market can be traced back to the 18th century when the East India Company issued shares to raise funds for its trading ventures. The fun fact here is, in those days, the trading in these shares took place informally in coffee houses and under banyan trees in present-day Mumbai, then Bombay. However, it was not until the mid-19th century that formal stock trading began with establishment of Bombay Stock Exchange, BSE, in 1875. Later, in 1982, BSE Sensex was established to track the performance of leading companies in the country. Then, in 1991, the major economic reform of India came, that is, the economic liberalization of India. This opened up the economy to foreign investment, boosting growth in Indian stock market. In the next year, India was shook by the biggest money market scam ever, the 1992 Indian stock market scam. This significantly disrupted the Indian stock market, leading to subsequent reforms with the formation of Securities and the Exchange Board of India, SEBI, as a regulator of the stock market. And at the same time, National Stock Exchange, NSE, was established in 1990. The way how different exchanges like BSE and NSE work despite coming from the same country is fascinating. But that is for a whole another video. So make sure you subscribe to the channel for such interesting videos. Coming back, after SEBI and NSE were established in 1992, the Indian stock market underwent a digital revolution in 1996, when SEBI introduced the current form of online trading, where investors can buy and sell securities online and hold their investments virtually in DMAT or dematerialized account. Later, in 2000, derivatives trading was introduced in the Indian stock market, allowing investors to hedge their risks and speculate on price movements. This led to the development of a vibrant derivatives market, including futures and options contracts. Another important event in the history of the stock market is the global financial crisis 2008. During this time, Indian markets experienced sharp declines, but the country's relatively strong financial regulations helped mitigate the impact. Later, in 2020, as we all know, the COVID-19 pandemic caused unprecedented market volatility and uncertainty, leading to sharp declines in stock prices globally, including in India. However, swift policy responses and monetary stimulus measures helped stabilize the markets. Fast forward to today, the Indian stock market is currently the fourth largest in the world by market capitalization of over 402 trillion rupees, recently surpassing Hong Kong to claim this position. This means the total value of all the shares listed on Indian stock exchanges is the fourth highest globally. The stock market acts like a giant pool of capital, helping businesses thrive and the economy to expand. So that's it for today, guys. If you have got something out of this video, please like this video and share it with your friends. Also, for more interesting videos like this, subscribe to the channel and hit the bell icon. Thanks for watching, and I'll see you in the next one.